Hi everyone and welcome back to today's morning report on Thursday the 16th of April with me, Richard Perry, market analyst at Hantech Markets. Moving on to cable now for sterling dollar, and the sterling dollar rally that, or the near-term rally that we've got, is slightly more advanced than the euro dollar rally, but still I think it's the same sort of situation. I still think it's just a rally that's going to be sold into. You've still got this big overriding overhead resistance at between 149.50 and 150 big figure that continuously capped the gains through late March and early April, and I think that could once again be the case. You've had these three candlesticks that actually are pretty positive, pretty bullish moves that have seen the close on the day quite towards the high of the day. And that sort of, again, takes me back to what I was saying on euro-dollar, where you had the early European session where you got the weakness coming through, the slight element of dollar strength, and then later on into the session where the US comes into trading, you see the dollar back under pressure as the data has disappointed, and that is again reflecting in this move. That was the retail sales on Tuesday, and then as the US session comes through, you start to see the strength again in cable as the dollar comes under a little bit of pressure. Fed beige book later on in the day yesterday, and we're just seeing a slight correction as the European session has taken hold. So technically what we're seeing is this near-term rally, and I think that near-term rally is now beginning to encounter some of the big overhead resistance. Now 148 figure has been a pivot level on this chart, provided the lows there and the highs on the 14th. Slight element of high there, so that is supportive now in the very near term. Obviously we're only about 20 odd pips away from it, so that is the immediate test to the downside. 147 figure is also a key pivot level, or has been historically on this chart, and yesterday caught the lows pretty much to the pip. So those are the two key levels to the downside, but on the upside, obviously that spike high that we saw on 48.79 overnight, and then around the 50 big figure. So the near-term outlook is positive, although you would argue that the MACD lines are beginning to sort of just tail off a little bit. You can argue maybe even a bearish divergence on the MACD histogram. But I think that's more sort of sideways trading, and I think this is going to be choppy throughout the next couple of days with all this US data that's coming through. You've got all this the housing data this afternoon, and the weekly jobless claims, both of which, interestingly, in recent times have been supportive of the dollar. So if that is the case again, then that would drag cable lower. So you might see a test of that 48 and maybe even 47 today. But generally speaking, I think that this is cable remains a chart to sell into strength. This is back on the daily chart. I've been talking a fair bit about this 21-day moving average, which throughout the decline and sort of consolidation and then subsequent decline has been a basis of resistance, then support, resistance again, and it sort of is back to where it is trading at the moment. It's sort of flattening off though, this 21-day moving average, so I don't know whether that's something that I need to be thinking about, but certainly it is still a gauge that I'm interested in, and we're just back towards it now, and it could well be again once more a bit of an opportunity to sell. So I wish you good luck in your trading on cable today, and I'll speak to you later. Thank you.